Hey, everybody. Welcome to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you're not familiar with our show, we've been on for weekly for quite a while now. But if you're not familiar with our show, we talk about earnings each and every week, and specifically on stocks or companies that have earnings announcements that are upcoming for the week. And we talk about how to profit from those opportunities. Okay. So earnings is an event. It's a highly anticipated event. And we look on how to make money off of this singular event that happens 4 times a year for every company. And that is on quarterly earnings. All right. Now we don't just talk about the earnings and the estimated earnings percentages or what they hit or missed. We talk about performance, okay, and trades on how to make money off of these events. So here we are. Happy New Year. It's the first full week of trading for 2026. And believe it or not, it's actually a light a light week in the sense of earnings. Next week, we have the start of the next earnings cycle. In fact, for the month of January, we have over 600 companies declaring earnings. And that is 3 times as much as we had in the month of December. So we're gearing up for a big earnings season. And we do have some key names this week, which we're going to talk about starting right now. Let's go. Okay, each and every week we do talk about stocks, or we talk about companies that have upcoming earnings. And at the end of the show, I recount the last trade that we did, because each week I give a trade alert. All right, so I'm going to do that for you again. I'm going to look back at the last trade that we did at the end of the year, and then look forward towards this year and our new trade for this week. But I also have something else for you, and it's how we did our performance for 2025, and you're not going to want to miss that. So what you see on the screen now are the earnings on stocks that we're focused on this week. Now, this may not be an all-inclusive list of every company that has earnings. These are the ones that meet our criteria for what we call breakout stocks. Those are stocks that move double digits or have the potential to move double digits through earnings. Those appear on the left-hand side of this sheet. And on the right-hand side of the sheet, these are quiet stocks. These are stocks that move single digits. We're talking percentages, okay? They move maybe 3% or 6%. They just don't move very much through their earnings events. And those appear, we call those quiet stocks, and those appear on the right-hand side of the sheet. So let's drill down a little bit. Let me show you an example. We're going to start with quiet stocks here first. All right, our quiet candidates. And I'd like to give an example, and this is Pfizer. Now, Pfizer does not have earnings this week. They don't declare until February, but this is a classic quiet stock. You can see that this stock just really does not move very much at all. I mean, it could take 2 months to move $4. It's very quiet, and it's very quiet through earnings. It averages just a 4% move through that earnings announcement. Okay, so there is a little bit of volatility, but it's not very much at all. For these candidates, we like to do a strategy called an iron condor, and we do this through our publication called Delta Neutral Income. All right, and we send out a trade alert, and we focus on selling premium going into this earnings announcement because options are more expensive. So let's take a look at our list, and we'll go down and we'll focus on some of these stocks. And you'll notice here that Monday, Tuesday, and Friday, well, they're very quiet. And the focus of this week really is on 2 days, and that's Wednesday and Thursday. But there are actually a couple of good names here. So let's look at the chart here, and we'll talk about some of these. The first is Constellation Brands. Now, we did 3 trades on Constellation Brands last year, and we were a winner on 2 out of the 3 of them. So not bad. All right. And with Constellation Brands, this company will declare earnings on Wednesday, January 7th, after market close. And you can see here that the average move is just 6%. All right. It just doesn't move very much at all. And so this is great for selling premium strategies. Okay. So an iron condor is our preferred method. If you don't know what that is, there's lots of free information out there. You can go to our website and look up under our educations section, and it's just two vertical spreads combined together, selling a call spread on top, selling a put spread on the bottom. You have your iron condor. It's a limited risk strategy, so you don't have to worry about being naked in the position. And that's what we would do on Constellation brands. All right. Now, moving on through our list of quiet stocks. All right. We do have Lindsey. Now, again, this is a mid-cap stock, all right? But you can see here, it's $122 a share stock. They will declare on Thursday, January 8th, in the morning before market open, and they have an average move of about 7%. Now, these trades work best on stocks in this price range. Really from about $50 and higher are ideal for these iron condor trades. We occasionally can find one in the $20 to $30 range as far as stock price goes, but mostly you're going to find them here on a stock that's valued at 120 to some odd dollars. Gives you plenty of room usually to create your iron condor and profit from really the lack of movement. So 7%, it's getting up towards the upper end of our quiet range, but still it's only single digits and there is an opportunity there. Moving on through our list, we do have CMC, which is commercial metals. All right, having a good day today, but we're not focused on the long term. You can see that this stock does channel in a range, and then it'll catch a bid, and then look at that, it channeled again as we kind of head into earnings. But they're going to declare Thursday, January 8th, also before market open, and the average move here on commercial metals is just 5%. All right. So here we have a $73 stock, and yet again, a good candidate for an iron condor strategy if the strikes are available equidistance below and above the current price to sell those two vertical spreads. All right. So we're looking at that as a candidate. And as we move on through our list here, we have two more stocks that we're focused on this week. So here is a company called RPM. Now, we've traded this actually several times in the past, and we do have actually a very good track record with RPM. This is a $100 stock. And yes, look, you see the stock was once $125, $130, and now it's $106. Okay, well, I'm not worried about this overall trend. You can see the last earnings announcement here that's highlighted by the vertical line. And look at that. Look how little the stock moved after that earnings announcement. All right. So RPM is going to have an earnings report. They will release on Thursday, January 8th, before market open. And the average move here is another 7%. Okay. So it is towards the higher end, but at $106, you might be able to sell something. If you can get it at least 10% out of the money, at least 10% out of the money. So, you're looking at $10 above and $10 below the current price. Then that is really creates decent odds of success, really respectable odds going in and through the earnings announcement. And our last quiet stock is really if you're if you work in the garage any length of time, and you're kind of handy, about this company. This is WD-40. All right. WDFC is the symbol, and they will have earnings on Thursday, January 8th, after market close. And the average move here is 7%. So WD-40, again, is usually a pretty quiet mover. You can see back in July, they did have earnings announcement right here. Right there was their earnings announcement in October. You can see there was a little volatility, but believe it or not, this is just a 5% move, okay, between the day after and then this candle here. When you add all that up and subtract, because it opened up here and closed down here, that's just less than a 5% move. All right. So an iron condor, probably if we got the nice pricing, about 10% out of the money, we did very well on WD-40. All right. So those are our quiet stocks for this week. Again, the big names start next week. We have the banks, all the big banks, JP Morgan, Wells Fargo, Bank of America, all coming next week. So you want to be, make sure you stay tuned in each and every week, because you never know when these great opportunities come our way. All right. So let's talk about now the exciting volatile stocks. We're talking about breakout candidates. All right. Breakout candidates are stocks that move double digits on average, move double digits through their earnings announcements. Here's Akamai. Now, Akamai does not have earnings announcement this week. It's not until February. Okay. But this is a classic breakout stock. You can see I've got the earnings indicated with the ellipse, and you can see the big moves through the earnings announcements. The single move, $7 to $10 easy. It'll move double digits. It does so each and every earnings announcement. Great stock to trade, and we trade it on a regular basis. Now, this week is full of good opportunities if we get the pricing right. So let's look at our list this week, and you're going to see some names that you may or may not be familiar with. All right. So Penguin, PENG, I'll talk about that. Applied Digital, Apogee, Franklin Covey, Air, and Helen of Troy. We're gonna hit on some of these, and I'll tell you why they're fascinating. All right. So let's start with PENG, which is Penguin Solutions. All right. Now this is a $20 stock. All right. And it is, I don't have my, for some reason, my little indicator went away on this, but they will declare, let's see here, on Tuesday, and I believe it's after market close. Let me get that for you here real quick. I believe it's after market close. It is. So Tuesday, January 6th, after market close, and the average move here is 13%. Okay, this little stock, as you can see, look at the last time it had earnings, boom, down it goes. Big move. Earnings before that, look at this nice little candle there. Okay, so this stock really moves around earnings. I just priced out for these trades, for these breakout candidates, we use strategies called straddles and strangles. Okay, we do this through a publication called Delta Neutral Breakout. And we send these alerts out to our customers, follow the trade from beginning to end, including updates and announcements and commentary. All right. But when I priced Penguin out for a trade earlier today, it was priced right at that 13%. Okay. Meaning they're pricing in a move that is pretty much the average. That means no trade for us. We're looking for a little discrepancy, and I'll show you an example of that here in a moment. But a $20 stock, usually we can get this for between $2 and $4 on average. Okay, that's $200 to $400, which is perfect for our hypothetical trade or hypothetical account of $10,000. That's what we're kind of basing all of our debits on or our credits on. And margins is we're basing that on a $10,000 trading account. Okay. So Penguin will have earnings tomorrow after market close. So moving on, then we move to Wednesday, and Wednesday we have Apogee. Now Apogee will declare Wednesday, January 7th before market open. The average move here is 16%, double digits. So if I price out the options and I do a straddle or strangle, and my break evens are, say, 11% above and 11% below, and the stock moves 16% on average, that's a good candidate. Now, right now, they are pricing this for a 15% move. That leaves very little room for an edge, and I'm looking for that edge. We look for edges in trading, put the odds of success on our side. And I'll keep watching it, but Apogee right now was right there. But I would love to find a trade on a $37 stock. Okay, companies that are $370, those are going to be expensive. Those are going to be $4,000 to $5,000 to do that trade. Okay, but here on the $37 stock, we should get between $400 and $600 on our debit, and that's kind of where we are. It's a little expensive for our taste, so we'll be watching it. All right. Next on our list is Applied Digital. Now, they will declare on Wednesday, January 8th, after market close. The average move here, yes, that's not a misprint. That is 35%. The average move for Applied Digital is around 35% after its earnings announcement. For these, we like straddles and strangles. Yes, implied volatility is higher, but if we can get it, say, for a 17% move, then that leaves a lot of room for it to outperform where the pricing is, and for us to profit in the trade, like we have done so many times. And you've seen it right here. We review our trades each and every week that we apply, and that is why we do what we do. We do the strategies that we do. So Applied Digital, APLD, has earnings Wednesday, January 8th, after market close. All right. Now, another one we've traded quite a bit in the past is Franklin Covey. Now, Franklin Covey, they will have earnings on Wednesday, January 7th, after market close. All right. And the average move here is 13%. And again, here's another one where the move is priced in right at the average. Okay. It is right now a straddle on this. It would need to move 13% higher or 13% lower. They've got it pinned in. And I think that comes from a history of mispricing. And that's the best word I have for it is they're just not calculating the expected move enough. And then after enough times, market will adjust and they'll start pricing for that bigger move. And that's what they've done finally with Franklin Covey. Okay. It was a little gem there for a while on having bigger moves. And they were underpricing the options for the expected move. Okay. Now here's another good one. This is Helen of Troy. Helen of Troy, HELE. Look at this, another $21 stock, another $20 stock. Now they will have earnings on Thursday, January 8th, before market open. So first thing in the morning on Thursday. The average move here is 20%. 20% is the average move. And you can see this last move here, just that volatile drop. That is the break. That is a classic breakout that we're looking for. In this case, it was a breakdown in price, and a straddle or strangle would have been the right call for this type of stock. And you can profit nicely on that if the pricing is there for us. Okay. So I would want pricing to where my break evens are maybe 13 or 14% away, higher or lower. And then for it to move 20%. And that's how we make money on the trades. All right. Now, our final stock for the week is on AirTest Systems. All right. They will declare earnings on Thursday, January 8th, after market close. And here's another good one. It's a $23 stock that makes 28% moves around its earnings. And that's just a lot of fun to watch. If you aren't paying attention, some of these are a lot of fun to watch, and it's time to start making, instead of sitting on the sidelines watching them, it's time to start making money from them. And again, not each and every one of these stocks is tradable, meaning the pricing might not be there. All right. But I do that work for you. And that's why it's nice to either be a subscriber to our publications or to join us here for our show each and every week. All right. And I'll show you why you want to join our show each and every week here in just a second. So what I'd like to do, let's take a look at our list one more time. And again, this is not a comprehensive list of every stock that declares earnings this week. These are just the ones that meet our criteria for both breakout and for quiet. All right. And we like to do both. And we do both each and every week right here on Earnings Call. All right. So let's move on. And I want to talk about the trade that we ended the year with, along with our annual performance. How did we do last year? And then I'll give you a new trade to start off 2026. So let's get right to it. All right. We closed out the year with a stock that is it's usually a consistent winner for us. And that's CarMax, KMX. And we did a strangle on this particular stock. And we were looking for it to break out like it did the last earnings event, which you can see that E on the chart there on the left-hand side, a nice little gap down that it had on that earnings announcement. And so we were expecting the same thing. Don't know which way it's going to move. Could move higher, could move lower. And that's what we expected. Well, guess what? The big move didn't happen. So what happens in your trade? Well, if it doesn't move enough and you run out of time, then you end up with a loss. So let's see how we did in this particular trade. And sure enough, you can see there we waited just 2 days because then our trade expired. All right. We stood in there. It did have a little volatility on that earnings day, but nothing like the last 4 earnings announcements. Okay. And we ended up losing $107. Our debit was about $286. All right. So we were able to exit at a credit. Our debit was $286. And our credit was, $107 less. Okay. $107 loss. Now, again, I mentioned earlier that we do these trades based upon a hypothetical $10,000 account. And that would be a loss of 1% on portfolio. Now, if that sounds like a lot, it's not. Okay. It's easily recoverable. When you have a loss of $107, and yet for some of these breakout trades, when you can make $400 or $500, right? I mean, just in an instant, just from the earnings announcement, it makes this really easy to overcome. All right. So how did we do last year? Because we do these trades each and every week right here on this show. We record them all. Okay. They're all verifiable through the show. If you go back and watch all the trades that we did. So I'm going to show you the results. And the results, keep in mind, they are on if you took each and every trade. If you missed one, your results will be different. If you missed 2, your results will be different. And they could be drastically different. Okay. If you missed 3 winners in a row and all of a sudden you had a loser, well, your performance is going to be different. Okay. So this is every trade that we did for the year. So let's look at those results. Okay. So here's the results. The bottom line is we're basing this on a hypothetical $10,000 account, and look what the total profit or loss was in the upper left-hand corner. That's a profit of $11,340 on a $10,000 account. Folks, that's a 113% return on portfolio for the year 2025. And how did we do that? Well, look at the number of trades in the top right there. We did 46 trades. So 1 trade a week during the show. We had about 46 shows last year. Okay. We didn't have 52. We had 46 because some Mondays are holidays and we do the show every Monday. All right. And we can see there at the bottom, look at the bottom left, 72% of our trades were winners. That means 28% were losers. So it's all about managing your risk in your trades, okay? Having more winners than losers, all right, which helps. Okay, helps big time. And you can have a result higher or even lower than we have, okay? Because we, in our publications, we actually send out alerts of when to exit. Here, we just talk about the trade next week on when we would have exited the trade. But all these are short-term trades. They're no more than just a few days long. And that was the performance from last year. Okay. And just go back and look at the history of the recordings. Look at all the recordings, all 46 of them, and you'll add it up and you'll see the results right here from Earnings Call. So what's our new trade of the week this week? All right. Well, we're going to go right back to the well, and we're going to do a straddle on applied digital. Okay, APLD. A straddle is essentially buying a call and buying a put at the same strike price with the same expiration date. Okay, this trade is going to cost us right around $500, which for a $10,000 account is 5% of portfolio. Very, very acceptable amount of risk. All right, so our debit would be $500. We are expecting that big pop. Remember, this stock moves over 30% through its earnings announcements, and we're kind of expecting that same thing to happen this week. So a straddle on applied digital And what we'll do, you'll want to join us next week because we'll talk about this trade and how we did in it and how we kick off 2026. And as I mentioned before, the next cycle of earnings begins next week with the banks, so you're not going to want to miss our show as we talk about JP Morgan, Bank of America, Wells Fargo, and all the big banks as they gear up for their next round of earnings. And we'll talk about it here on Earnings Call. So everyone have a great trading week. Happy New Year, and I will see you next week.